the close of trading here in the U.S. Live from Bloomberg's World Headquarters in New York, I'm Scarlet Fu.
I'm Matt Miller.
And I'm Oliver Rinnick.
Equities recovering from an early sell-off spurred by Apple. Energy producers are racing a drop after data showed crude stockpiles unexpectedly dropped.
But the question is, what'd you miss? From cars to batteries, Tesla reports earnings today after the bell. Wall Street will get an update on Elon Musk's plans to expand its business model beyond the flagship electric vehicle. And some of the heaviest weighted companies will report tomorrow, including Alphabet, also known as Google, and Amazon. Will drill down on all of Alphabet's revenue streams, the other bets in today's Numbers Don't Lie. Plus, Republican nominee Donald Trump has a slim advantage in Florida, according to a Bloomberg Politics poll. It's a critical battleground state, but will it be enough to get him to the White House? We will hear from Donald Trump himself later this hour.
And as we head towards the close, let's look at where the major averages stand right now. A little bit of mixed movements on the stock market today. Looking at the Dow up about 30 basis points in the green. Some of those big industrial stocks doing pretty well. But on the flip side, the S&P about flat to down a little bit, and NASDAQ tech hurting a little further in the green. So let's get some more on that. And let's talk about tech with Abigail Doolittle, who is at the NASDAQ.
Hi there, Oliver. Well, we have had the NASDAQ trading lower all day, not flipping green as the S&P 500 had done earlier and as the Dow is now, in fact, pretty close to session lows. Now, as Scarlet mentioned, the big drag all day has been Apple on disappointment around the company's September quarter. That was basically in line, as was the December guide, but the stock had run up so much, up more than 20% from the last quarterly report, that investors' expectations may have been a little bit high, so we're seeing a bit of a reset there. And we also do have some of the other big tech stocks dragging today, Amazon and Alphabet, ahead of those earnings reports tomorrow. Now, reporting after the bell today, Buffalo Wild Wings shares are trading near a 3-month low, suggesting that some investors may be a little bit cautious going into this report. Investors are looking for $1.22 in earnings on $500 million in revenues, a slight comp decline of 1.4%. But Wells Fargo's Jeff Farmer, he is saying that he would not be surprised if Buffalo Wild Wings lowers the full-year earnings outlook unless some aggressive cost-cutting is put into place. It'll be interesting to see what happens there. Another company reporting after the bell, as was mentioned, Tesla. Now, here investors are looking for a loss of 53 cents per share on $1.9 billion in revenues. They already pre-announced the number of vehicles that were delivered in the third quarter, 24,500. And Bloomberg Intelligence Kevin Tynan says that that surge in vehicles, it was better than expected, really driven by the Model S, was driven by discounting. But the big story here around Tesla's report could be an accounting change. It could really create some confusion among the earnings estimates and perhaps a bit of a headache. So it'll be interesting to see how all of that plays out, Oliver.
Abigail, so we know that Tesla is pretty typically a volatile stock, especially after earnings. It can jump a lot. So are we in store for another wild ride here?
Well, we could be. We go into the Bloomberg and we take a look at BTV 4569. This is a one-year chart of Tesla. And where we see huge volatility in the beginning of the year, we see that Tesla was down 42% at one point and then up 89%. But after that big move up has basically been trading in a range, coiling tighter and tighter, telling us just how uncertain investors are here. They don't really have a great deal of clarity as far as what's ahead, but typically these sorts of ranges, especially those that coil tighter, tend to produce huge directional moves either up or down. So whether that comes off of this earnings report or something in advance, it's unclear. But at some point in the relatively near-term future, Oliver, we're likely to see a big volatile move out of Tesla.
Abigail Doolittle at the NASDAQ, thank you so much for the recap.
All right, we have some breaking news on Snapchat. The company will seek to raise as much as $4 billion in its planned IPO. This is according to people familiar with the matter. This IPO could value Snapchat at about $25 billion to $35 billion. No final decision has been made yet, and the size of the IPO, as always, could change. But they did say, those people that we talked to, that the valuation could reach as much as $40 billion. One thing to keep in mind, though, is that because Snapchat's revenue is less less than $1 billion. It plans to file the IPO documents confidentially with the SEC. So we're going to get dribs and drabs of this kind of news. And of course, Snapchat is the name of the app. The company's name is actually Snap Inc. now.
Right. And I would think that the less disclosure and transparency there is, the harder it's going to be to price this. As we've talked about before, that these types of social media companies, it's kind of hard to figure out what exactly they're worth. We know,
I can't even figure out what they do. How does Snapchat even work? I mean, how's your Snapchat game?
Of course,
strong?
I was just Snapchatting. Any time of the day I have Snapchatted in the past 1 minute. But basically, it's ads, right? So they have this new platform where you put stories up, you put pictures, videos up, and within those, as you're going and looking at all your friends, there are ads interspersed within there. So that's definitely part of it. Of course, there's more to it than that, but that has been their big change as of late.
And we should mention that a representative for Snapchat declined to comment on our reporting. We know that the company had already picked Morgan Stanley and Goldman Sachs to lead its offering. There's also, of course, other banks involved as well. JP Morgan, Deutsche Bank, Allen & Co., Barclays, Credit Suisse, most of the big banks involved as joint book runners for the eventual IPO.
All right, we should note that Alex Brinka and Sarah Fryer, our tech reporters, continue to break stories on this company. And just to recap, Snapchat is going to raise, or planning to raise, as much as $4 billion in its planned initial public offering. Are Alex and Sarah also big Snapchat people?
I don't know about Sarah, but I know Alex is. I was also just going to add that the 40 billion figure, that's in comparison, it had recently raised a private market value to about 18. So we're making some serious progress there on the valuation of the company. Let's
bring in Bloomberg's Tom Giles, runs the team for us here at Bloomberg News. Tom, let me ask you about this tech IPO. They had been slower this year, right? Especially the tech sector IPOs. Are we going to see an inflection point? Is this going to signal a pickup?
Absolutely. I think the fact that we're looking at a big IPO early in the year, we think it's going to be before March of 2017. We think that's going to be herald a much bigger year for IPOs next year. There's obviously a little bit of uncertainty left in areas of the world, a little bit of uncertainty with regard to the election, but it's definitely lessening the closer we get to November. So all of those concerns that we've had that have been standing in the way of IPOs have really started to fall away, really started to recede. We've seen IPOs come back at the end of this year, and I think, yeah, absolutely. The fact that Snap is going out there looking to raise $4 billion, valuation significantly higher than the last time we saw them raise in the public market, is definitely going to be something that's bullish for investors in the IPO market.
Why would Snap want to go public? I mean, there's plenty of money swirling around Silicon Valley. It doesn't absolutely need to go public. It could get private money and stay private and not have to disclose all this information and data to everyone.
Yeah, I mean, companies, as you point out, are staying private so much longer. There is so much money sloshing around Silicon Valley. And it's not just Silicon Valley anymore, by the way. You're seeing these sovereign wealth funds from the Middle East, from other parts of the world, hedge funds, Fidelities of the world, have all, definitely changed the scene there. The thing with Snapchat, you're going to be able to raise a significant amount of money in one fell swoop. That's going to help them with their expansion. That's going to help them with their pivot. They started out as this company that, oh yeah, they're the ones that the teens use to send these disappearing messages, things they probably shouldn't be sending. Snap has come a long way over the last couple of years in re-pivoting itself and making it into much more of a media company, much more of an advertising company, much more of a place where people are sharing photos, doing a lot of the things that you do on a Facebook. And so increasingly you're seeing Snap move further and further into the direction that Facebook is moving. And if you look at what Facebook has done, if Snapchat can get anywhere near that, you're looking at a company that has much more room to grow, much more expansion, and so these funds are the things that they can do. And also remember that when you're a private company, at some point you want your employees, your executives to have that exit, to have that opportunity to unlock some of the value that they've been sitting on, toiling away for year after year, not being able to tap into their shares. This is the kind of event that really frees them up, enables them to do that. And it also is an exit for these venture capital firms, these funders who have been sitting by patiently waiting for companies to go public, and these companies have been holding out for so long. It's nice for them to have an exit.
I wonder how many people actually are using it, though, outside of Oliver's generation here, Tom. Because if I look at my Facebook page, right, my mom's on there, my aunts and uncles, my nephews and nieces, grandparents, right? Is your mom on Snapchat with you?
No, and that's why we like it so much.
That's why you like it, but there's not a billion people using it, right? I mean, Twitter even has almost 400 million people using it. They have a market cap of only $12 million. What justifies a $40 billion market cap for Snapchat? Do you foresee a time, Oliver, when every generation in every country in the world is using Snapchat?
Well, that's tough, right? And that's what right now separates it. And I think to that point, it's very interesting to watch sort of the evolution of its market value. Like we just said, right now, this potential round, it could bring the valuation closer to 25 to 35 billion. You know, recently in the last private round, it was close. It was, you know, less than half of that. So the question is, Tom, at what point along this process can we start to get some clarity on what it might actually come to market as?
It's going to be a while before we get some clarity there. As we point out in the story, it's a pretty wide range. And you had even one person we talked to saying that the valuation could get even higher, up into the $40 billion range. That may be a little bit ambitious. That may be a little bit aspirational. But at the same time, you know, Snap has gone through this tremendous transformation. And increasingly marketers are looking at Snap as a way, hey, we can reach our audience through this. It's new, it's different, it's fun. It's something that's singular from what you see on Twitter, from Facebook, the other social media giants. The challenge that Snap is going to have is making Snapchat more appealing to more generations. You're absolutely right, Matt. Somebody over 30, over 40, certainly where I'm at, it's something that I have yet to really embrace, and the people from my generation have yet to really embrace with a lot of gusto. It is still seen as something that the kids do, that a younger generation does, and you're probably going to see, as more and more marketers get involved in it, they're probably going to see the appeal, and they're probably going to definitely increase the urgency of them making this something that other people can understand and that's appealing to a much broader base.
I'll tell you what, your story definitely has people sitting up and paying attention here. I'm going to take lessons from Oliver after, but Tom Giles runs the tech team for us here at Bloomberg. They broke the news with Alex Barinka and Sarah Fryer that Snapchat's looking to raise up to $4 billion in an IPO, and we'll continue to follow this story for you.
All right, coming up, we're also going to take a look at the giant that is Alphabet and its business, from its search to the Pixel. Where will investors be paying attention when that company reports tomorrow? This is Bloomberg.
Today's
I'm Scarlet Fu. This is Bloomberg Markets. Google has spent years telling Wall Street that its investments in non-advertising businesses will eventually pay off. Well, last quarter, Google's parent Alphabet posted results which suggest that's starting to happen. We can check out Alphabet in today's The Numbers Don't Lie. So let's start with the moneymaker, Google. It is still going strong, but if you look at the other part of its business, where sales jumped 33% to $2.2 billion, a record in the second quarter, growth in cloud computing and corporate software really drove those gains. And the cloud is part of Alphabet's efforts to diversify. Advertising, which is the white line here at the very top, remains the company's main revenue driver. It was responsible for more than $19 billion of the overall $21.5 billion in the second quarter when it comes to revenue. Mobile ad sales and YouTube are Alphabet's stalwarts. YouTube and Google Search, and there again is the white line at the top, bring in the most monthly mobile users in the U.S., nearly 182 million. This helps Google keep pace with Facebook, which is the blue line right below the white line. And together, Google and Facebook account for over half of the mobile advertising market. YouTube has a commanding lead in online video watch time, even with Snapchat and Facebook's rapid growth in daily video views. Now, according to Bloomberg Intelligence, YouTube may average more than 300 million hours daily. And this audience should help YouTube's net ad sales, which is expected to rise 21% to more than $5 billion in growth, in 2016. And as you can see here, grow even more in the future. Part of that growth could come from YouTube's new live TV streaming service, which will reportedly launch in the first quarter of next year. At the same time, Google hopes to convert on the virtual and augmented reality market. The company this month released a virtual reality headset that is cheaper than other options in the market. CEO Larry Page is making this move as some of Alphabet's moonshot businesses, we're talking about Google Fiber and Nest, are being overhauled to reduce costs. We'll, of course, be following Alphabet's results when they cross after Thursday's U.S. closing bell. Matt?
All right, we have breaking news here. Mark Garnier, who is the UK trade minister, is saying that British banks are unlikely to keep their passporting rules as they are now. He was asked by a Bloomberg news reporter who talked to him on the telephone whether or not the UK would be able to, lose passporting rights for UK banks or banks operating in the City of London, but gain something that was of similar equivalence. And he says, I've got a direct quote here from Mark Garnier, "What we are not trying to do is fit into an existing box. We are trying to create a new model." So saying that he believes banks operating out of the UK will lose their passporting rights. This is UK Trade Minister Mark Garnier. This is a huge, obviously, issue, right? Because the City of London is so dependent on those banks. A lot of those banks have staked their claim and said they're going to stay there. I'm thinking, for example, of Jess Staley at Barclays. He's said, look, we're committed to London. We're going to stay here. Others, Jamie Dimon of JP Morgan, have said we may have to start thinking about moving thousands of people out. So not only is it important for London, for the banks that operate out of London, but also for a number of other financial capitals or would-be financial capitals, Paris and Frankfurt, Dublin, a lot of them vying for the possible business that London will lose.
And I was just going to say that it's also important to keep in mind, we focus on the banks because they're, this is obviously the banking center of Europe. However, it's not just the banks, right? So you've got other companies as well that are going to have to, think about how this changes their business. You've got insurance companies, asset managers. From Bloomberg Quick Take, about 28% of insurance exports go to the bloc. So this is going to affect a lot of people. About 21% of assets managed in the UK are connected to those EU clients. So this is a pretty far-reaching thing. This has really been the question, I think, hovering over what the impact of Brexit is going to be. It's obviously a very much a geopolitical thing, but at the same time, the people that are very sort of anti-Brexit this is the type of stuff that they're very concerned about, is how is this going to affect movement from businesses in the UK outside of the country.
Well, I think what's also very interesting is this is all part of Theresa May's really hardline stance on Brexit.
The hard Brexit that everyone was worried about, because initially they thought, you know what, we'll be able to have it both ways. The UK will be able to keep its access to the single European market and also be able to maintain sovereignty over its borders. And now, increasingly, it looks like she's prepared to give up the access to the single market, the customs unit, in exchange for that right to control its border.
All right, very interesting stuff. So Brexit, it's very much alive and well. Up next, ousted Tata Group Chairman Cyrus Mistry is warning that the T2 Software Corporation may face $18 billion in write-downs. We'll take a closer look at India's largest conglomerate. This is Bloomberg.
I'm Scarlet. What you missed, Edward Life Sciences is the biggest loser in the S&P 500 today, down 16%. It sells heart valves and other medical devices. And this is the SURP function on the Bloomberg that allows you to track the surprises and how it does relative to expectations. And here we're looking at revenue because for Edward Life Sciences, EW is the ticker, this is the first time it missed its revenue estimate. Matt, zoom in right here, that negative 1.3%. That's a miss there for revenue. The first time that's happened in more than 2 years. You have to go all the way back to the first quarter of 2014, the last time that happened. Now, until this week, Edward Life Sciences had been one of the top performers in the S&P 500, up as much as 54% year to date. It is seen as the growth story in med tech, but the culprit here was some reduced selling in France. A lot of the analyst notes I've been looking at, Oliver, say that now's a good time to buy on weakness. Perhaps the expectations were just too lofty.
All right, and you know what else you can buy on? You can buy on sentiment. So I'm going to bring up a couple charts that I like. The first one, the main focus is BNP Paribas Love Panic Index. That's in the white right here. This is based on various different inputs, trying to figure out whether or not investor sentiment is bullish or bearish on stocks. The blue line right here shows the economic surprise index. Let's bring it over here to the end, which is where we are right now. This yellow line is 0 for the love panic. When that thing goes over, that means people are feeling bullish. We've been vacillating, but we're not quite there. For some people, they like to see that kind of hesitation. Matt?
All right, I read a great story this morning on the Bloomberg website about Tata. The big Tata Group controls so many different units. The chairman of the group, Cyrus Mistry, has just stepped down. This is a look at the most important units that Tata owns. The yellow line is the market cap when Cyrus took over. The orange line is what's happened to the market cap since he's been running the company December 2012 until now. You can see that some of the biggest units. The consultancy has lost about $20 billion in market cap. Even Tata Motors, which owns Jaguar and Land Rover, has lost a lot of market cap, and that could be one of the reasons why he is being pushed out.
That is a fantastic story. You should all check it out on Bloomberg. Lots of corporate drama and intrigue over in India. All right, the market closes next. This is Bloomberg. We're moments away from the closing bell. What'd you miss? U.S. stocks fluctuating as a rally in financial companies offset an uninspiring outlook from Apple. Bonds retreating as a surge in European debt supply weighed on fixed income markets. I'm Scarlet Fu.
I'm Matt Miller.
And I'm Oliver Rennick.
We'd like to say welcome to all of our viewers tuning in live around the world on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 p.m. to 5 p.m.
We begin with our market minutes. It was a mixed day here for U.S. stocks, with the Dow closing up by 30 points, the S&P and the Nasdaq losing some ground. Volume overall was better than the 20-day average, so a pickup there in activity. The laggard here was real estate stocks, the REIT index. Financials, however, were the best performers.
Yeah, financials were. I'm taking a look at the IMAP here, and you can see that the green on the screen is really led by financials, industrials, and energy names. Real estate, healthcare, and telecoms were the big losers. I like to click into the financials here to see what they did during the day, because at the end of the trading session, we did get that news about Brexit. It doesn't seem to have affected the financials trading here. You would think, though, that some banks are going to be losers and some banks are going to be winners if, indeed, banks operating in London do lose passporting rights. Let's take a look at some of the winners and losers in the stock market today. Almost all of it earnings related. So Chipotle disappointed investors. The shares tanked another 10% to $37.48. Love, that's the ticker for Southwest Airlines, also a big disappointment. Apple yesterday actually beat on earnings estimates, but missed on revenue estimates, and also put out some soft outlook figures that disappointed the market. Of course, a 2.25% drop by Apple is much worse than a 10% drop by Chipotle. Apple, the biggest point loser on the S&P. And then Boeing actually coming out with a positive earnings surprise, boosting the stock by almost 5%.
Matt, that's a very solid stocks market, man. You're giving me a run for my money. I'm going to look at bonds today. Let's start off with just pretty simply here, looking at the 2 and the 10 years. Looking in the U.S. first, bit of a selling on both fronts here. You're up about 2% on the 2-year note yield, as well as about 1.5% on the 10-year note. So some losses there. Same thing happening on the 2-year notes in the U.K. as well. So to some degree, very slight flattening of the curve as the short end moves up a little bit more on the yield curve. And then I want to flip it over and check out what's going on with break-evens. Well, we don't have break-evens, but I'm going to talk about break-evens.
Oh, I have.
Very interesting, because they just keep going up and up with inflation expectations.
Wait, I have a deep dive on that later on in the...
Well,
you're not doing the same thing.
I'll back off.
I'll
back off.
Okay.
That's called a deep tease.
Okay,
All right.
we'll wait.
Let's go to currencies in the meantime. I'm looking at the Aussie because it made a sharp U-turn today. It gained initially in Asian trading. It shot up really in Asian trading after an increase in CPI reduced the odds of a rate cut from the RBA. But later on, you can see it steadily erased those gains as commodity prices declined. So there also might be weakness ahead because, as Vince Signorella reminds us, he's the Bloomberg First Word foreign currency guy. Earnings from Australian banks are due out tonight, and that may weigh on the Aussie. Emerging market currencies down, down, down. The big ones to pay attention here to are the rand, the peso, and the real. For the rand, it's not just the currency that's down. South African bonds are declining on political concerns. Police clashing with students who were protesting outside the Parliament complex while the Prime Minister was inside presenting his midterm budget. The peso declining after the politics poll from Bloomberg showed that Donald Trump leads Hillary Clinton by 2 percentage points in Florida. So again, a proxy for the electoral chances for Donald Trump. And the real sinking along with commodities we mentioned there. The peso, by the way, falling the most in a month.
Very interesting stuff. I'm going to turn it over to commodities. Starting off with the general commodity index, which is down around the lowest point of the week here. This is your 5-day GIP on Bloomberg, looking at the intraday move. Down about 2%. Some weakness. This is now the 2nd day of decline, so not a great week there. Then secondly, looking at some specific oil figures here, both down. This is another deep tease because I'm going to talk about Brent oil later, but let's start off with the fact that they are down almost 2%, about 170 basis points each. And then finally, mix it up.
I feel like contango. I feel contango coming on.
It is coming on. Not for corn, though. Right now we're looking at corn, which is actually, this is looking at your 6-month figures, so we're down. But look at since September, it's been on quite a bit of a tear. It's up about 17%. Part of that is coming from the idea there's going to be significant demand for ethanol, so a pretty good day for corn.
All right, those are today's market minutes. Let's take a deep dive down to the Bloomberg. You can find all the charts using the function at the bottom of the screen.
I am looking at, I'll kick it off here. I'm looking at signs of inflation reviving, and this is what Oliver was alluding to as well. These are, this is the 10-year break-even rate, and you can see that it's just been shooting up really since the end of June. In fact, even after I made this chart this morning, it's come up higher. So right now, we're looking at about 1.75 here on the 10-year break-even rate, almost there. And this is made even more interesting by the fact that a lot of smart people out there, including Rick Rieder from BlackRock and Jeff Gundlach from DoubleLine, are saying inflation is coming back big time, or at least it's difficult to tell. Rick Rieder said inflation, he said bonds are like his golf game, right? He's not very good with the driver, but he's good with the chipping wedge. And Jeff Gundlach said tips now are for winners. Remember, he said tips are for losers a couple years ago. So
that's not very nice.
Well, he's changing his view, and that's a very interesting a piece of the market news, I thought, today, and it continued on throughout the trading.
This, of course, is against this backdrop of Fed officials and this whole conversation emerging about inflation and picking up and the possibility of what could happen if we don't hike. Switching it over back to stocks, I want to look at correlation measures, something that should help fund managers that are trying to pick stocks. When you look at this chart, this is basically showing, this is JCJ index on the Bloomberg. This shows you implied correlations. Joe Cioli on the Bloomberg team is writing about this right now. And this is basically showing you that implied correlations have come down. There's a little bit of a tick up in the past week here, but ultimately the trend from earlier in the year is improving. This should be favorable to asset managers. This means that fewer stocks are moving in the same direction. It means they're going in different directions. It makes it a little bit easier to pick the ones that you want to be in. But as we know, fund managers have been vastly underperforming their benchmarks. This could be a sign that maybe the next couple months here they can catch up to the benchmark before the end of the year.
So just some dispersion there finally, right?
Yeah, exactly.
All right. Well, meantime, I'm looking at the big picture. We're going to combine all the asset classes here and look at how everything's gone quiet all at once across all asset classes. So I've normalized this chart to the start of the second half. So June 30th, 2016 is the start date. The blue line is the VIX, so that measures stocks. The orange line is the Treasury's MOVE Index. That's at a 2-year low. The red line is JP Morgan's Global FX Volatility Index, the lowest this year. The green line is OVX, which measures oil volatility. That's at a 15-month low. And you can certainly see the drop down over the last couple of weeks there. Everything's kind of headed lower. It's like it's summer, but it's not. You've got slow growth around the world. It's not clear if this is complacency or if this is nervousness. There are, of course, several big events coming up, whether it's the elections or the FOMC meeting in December. That's the one that matters, or the ECB meeting in early December.
Our two charts are interesting together because oftentimes correlation drops with higher volatility, but as you're showing there, volatility is still low.
Yep.
So.
All right, we have earnings out from Tesla that are, at least on the revenue side, $2.3 billion, the adjusted EPS of 71 cents. The earnings per share seems to blow away the street's estimate, looking for 23 cents, so 71 cents is far above that. On the revenue side, actually, Bloomberg is now saying there was an estimated loss of 54 cents on the earnings side. So the EPS of 71 cents would be even better than a 23% estimate. We're looking at revenue of $2.3 billion. We have a new EEM. I don't know if you noticed the new earnings matrix, Scarlet. $1.8 billion was what we were looking for. So $2.3 billion would be far better than that as well.
That's fantastic, actually. If we go into Matt's terminal, that really highlights this new function that gives you a lot more of a snapshot of what the key metrics that you need to look for here.
Right. So this is the EEM function on Tesla. You can use it with, of course, any equity. But what it shows you is what the street was looking for. $1.88 billion was the sales number that the street was looking for. Adjusted EPS, it looks like a loss of 18 cents was what the street was looking for. That's the mean estimate of all of the analyst estimates that we have. And then the GAAP EPS number was 54 cents. So if you go back into the headlines, you can compare that to what we got. 71 cents was the adjusted EPS figure, and the sales figure was $2.3 billion. So it looks like much better than what the analysts had been estimating.
And, of course, if anyone wants to follow along with the headlines that Matt is reading, you can go to T-Live Go on the Bloomberg. That's our live blog of Tesla's results. And it has all the context, all the headlines that we need to know. A 71-cent gain, for instance. Revenue is a slight miss, according to David Welsh, who's one of our auto reporters. Full-year CapEx forecast here of $1.8 billion from our top editor. And fourth-quarter deliveries, Matt, at just over 25,000. The context here for Tesla, what matters here is that the company needs to raise some cash as well. So it's under pressure to deliver on its forecasts, on the earnings estimates, because it wants to be able to get that stock price higher and be able to sell shares and raise cash.
If you're an investor who wants to give them some cash, you obviously want to think about their plans for producing those vehicles, getting them out there. They do say that when they're looking at their goal for vehicles produced in 2018, it's still en route. They are on track for that. I thought some of their CapEx numbers were pretty interesting. They're basically saying that they're going to dial down a little bit in terms of their expenditures. They had previously seen about $2.3 billion in estimated CapEx for the year. That's now down to $1.8. And in this past quarter, in the third quarter, CapEx was about half of what they had expected. So that's pretty interesting as well. And then you look at the cash flow, which is turning positive, expected to be negative. So it does seem like there's some decent news to be found here. And as you know, Tesla is one of these stocks where everybody will be pouring over. There's a lot of people in the bear case. There's a lot of people in the bull case. The short interest is high, but a lot of people love Elon Musk. So
it's also interesting in that they report a lot of things differently than a traditional car company. I'm glad that you mentioned David Welch on the top live. He's saying revenue is a miss. I see revenue as a clear beat here, $2.3 billion, and the street was looking for $1.88 billion. Fortunately for us. David Welch is going to scurry over to the camera in Detroit, and he's going to walk us through some of these numbers because it's such an interesting company in what they do, but also in how they report, and sometimes it's a little bit confusing to follow along.
And it's a little bit confusing for investors who, if you look at Oliver's Bloomberg, the after-hours trade is a little bit all over the place. It's zigging, it's zagging.
It is, and now it's about up. So we closed roughly around $202. We're now at $210. Pretty big move up there, about $8 on the stock. But of course, this is just now coming out. The trading is just now continuing, and you can follow this along on Bloomberg TV Live as we parse through this. Like I said, this is a company where there's a lot of push and pull. So I'm sure there's going to be something for everyone here to some extent. But right now, the takeaway on the street is that it's a positive report.
And of course, we go back to the balance sheet and how much cash it has on hand because Tesla is under pressure to raise some cash here. It ended the third quarter with cash or cash equivalents of $3.1 billion. That is lower than what it had at the end of the second quarter, which is $3.25 billion. In addition to that, Tesla says that it is cutting its borrowing facilities balance by $178 million in the quarter. So cash conservation, a key theme here for Tesla as it moves ahead.
Let's go and talk to David Welch right now. He's joining us from our camera in Southfield in Detroit, Michigan. David, what do you think about the numbers here? It looks to me like it's a clear beat on the sales side and an even bigger beat on the earnings side.
Yeah, 71 cents is pretty big. First of all, I think this is only the second quarterly profit that Tesla has reported, and the analyst earnings were kind of all over the map. There was one that said they'll make 50 cents a share, another one said they lose 71 cents a share. So this has been a tough quarter to predict because they did have very good sales, but they're also starting to really push ahead with engineering for future models. And it's just tough for the analysts to get a handle on this. You also had the change in accounting. They're using fewer non-GAAP exceptions and costs when they figure out what the final numbers are. So a lot of analysts didn't even have their numbers revised as of mid-afternoon. But when Tesla makes money, it's big news. You'll probably see a big pop in the shares, even though they're all over the place right now. This just has only happened once before, so it's going to be a very good quarter for them.
David, I was just talking about how there's a lot of opposing viewpoints on this company. For the bears on Tesla, and there's a lot of them out there, what do they want to see here? And is there something that's going to give them pause and say, this is still a longer-term problem? This is, just a quarterly report. Is there anything that they can find fodder for here?
Well, you're really going to have to dig into the numbers, and they'll be doing that. A lot of them don't think the business is sustainable. What you can look at, too, is, and this happens with car companies because the engineering costs for future products are so high. If you put off a little bit of engineering work and cutting those checks for just a week and push it into the next quarter, you can really do some things with the numbers. And it's not playing with the accounting. It's just when you actually pay those bills and do the work. And when you have as much product development going on and as much engineering as Tesla does, they could make a case like that this is basically, when it comes to cash flow, a working capital issue, and when it comes to profits, just sort of, maybe putting expenses off a little bit. But, you did see very strong sales in the third quarter. So right now, it's looking like the pie in the face that Elon Musk wanted for the detractors and the naysayers on Wall Street.
Of course, the real pie in the face will be if he actually gets the Model 3 out on time and in volume, right? I mean, isn't that the challenge facing Tesla right now?
Well, there are two big pies that he's hoping to throw. One is the Model 3, and we're already looking at mid-2018 now. They always said they'd start building it late 17, but I don't think most people were anticipating a mid-2008 sale date. The other one is getting the Solar City deal approved, and that vote is November 17th. That's been a controversial deal. The stock took a big hit the day he announced that proposal, and if he can get that through, he can get his car out on time, then he will really have proven a lot of the shorts and detractors wrong on at least a couple of the big issues.
All right, and the shares continue to rise now, David. They're up 11.5%. This is a company whose shares year to date are actually down about 15%. Tesla has been obviously a risky and volatile bet. Does this maybe take some of the shorts out, you think? Do we see some short covering here?
Yeah, you may have to if you're a short on this one, because 11% is big. And the missing piece to this puzzle for the sort of, let's call it short and medium-term investors, has been profitability, and it's been positive cash flow. And they're really, this isn't just that they made a few pennies a share. 71 cents a share for this company is real money. And it even beat a lot of those who thought they were going to make money in the quarter. So, that just on the surface for a lot of investors is enough to say, hey, this business isn't just a hat-in-hand company going to Wall Street every 5 or 6 months for more cash. They actually might be able to kind of stand on their feet, to some degree, and won't need to be, getting cash as much as we've seen in the past.
All right, let me also issue a quick Bloomberg Markets correction. What'd you miss correction? I meant $11, not 11%.
Oh.
So it was up $11. Now it's up $12, $13, so it's a 6.5% gain. David Welch, thanks so much for joining us and clarifying some of those things for us. We're going to continue to follow Tesla earnings for you. This is Bloomberg.
All right, we have Groupon shares tumbling in after-hours trading after the coupon website said it is buying Living Social, its competitor, and this deal will close by the end of November. This deal was actually transacted 2 days ago. There's no price tag put on this acquisition. I was looking through the release, and Groupon says the acquisition consideration is not material, apparently. On top of that, Groupon reported third-quarter results. The adjusted loss for the third quarter was 1 cent, which matched what analysts were looking for. Revenue beat by $11 million, beat the consensus estimate. For the full year, Groupon raising its revenue forecast, maybe because of the acquisition of Living Social. Still, when you look at it compared to analyst estimates,
not material.
That's a good point.
Scarlet.
Not material. Still, the forecast is in line with what analysts were looking for. Nevertheless, when you look at Groupon shares, down almost 9% in its
It looks like
trading.
Groupon is going to hold a conference call at 5 p.m. So anyone who wants to tune in for that, you can find the address on the Bloomberg.
All right, we'll have much more on that, and we're also going to discuss more on Tesla and volatility with Ashish Shah, not Tesla and, but just volatility. Ashish is the Chief Investment Officer of Global Credit and Head of Fixed Income for AllianceBernstein. This is Bloomberg. What'd you miss? Volatility. What? Did you really miss it? As Matt Miller was just saying, if you come inside the Bloomberg, this is my deep dive from earlier, and it shows the lack of volatility across asset classes. Whether you're looking at stocks, treasuries, FX, or commodities, everything is quieting down. And we're looking at multi-month, or in some cases, multi-year lows for some of these asset classes. For instance, treasuries, volatility is now at a 2-year low. I want to bring in Ashish Shah. He is Chief Investment Officer of Global Credit and Head of Fixed Income for Alliance Bernstein. And Ashish, it's like it's the summer, except it's not. We're in the busy period of the year. There's slow growth around the world. Do you think all this quiet across asset classes is complacency or nervousness?
It's actually neither. It's a lack of yield. Out there, everyone's looking for yield, they're looking for income, and they're really having trouble finding it. And so what are you going to do if you want to generate yield in this environment? You're going to sell volatility. And so we think that that obviously creates problems. If you remember, 15 months ago was the flash crash in August, right? You had VIX spiking up north of 50. Today it's at 15. You're realizing 5. That's amazing. But
that was, you're not talking about the yuan devaluation. You're talking about the Treasury flash crash.
No, I'm talking about the yuan devaluation.
Oh, okay.
But think about that. Like, to go from 50 to 15 unimplied in 15 months. That's a very different kind of environment. It's almost like we're in a pond, smooth pond, smooth sailing, and there's black swans left and right. And you just got to look out for those black swans.
So haven't some of those, all right, well, I guess you can't really look out for a black swan, or else it wouldn't be one, right? But let's just say some of the swans on the horizon in August have faded to some extent, right? I mean, the economic data is solid enough to where the Fed feels like they're probably going to go, right? The market thinks they're going to go in December. You've got overall that sort of element has improved from the economic side. You also have a currency regime around the world that is a little bit less volatile. As you pointed out in August, the very quick Chinese devaluation. It's depreciated since then, but they've been a lot more transparent. So are investors not right to have a little bit more assurance right now? So
I think you're right that you are seeing better growth, right, particularly in developed markets, but you're seeing better growth overall. You're seeing a little bit more inflation right now. We think you end up seeing inflation double over the course of the year. So there is a change going on. It's been exactly 1 month since you saw the sterling flash crash. Right, so it's not like volatility is gone, but there's opportunities as a function of that change that's going on when it comes to inflation.
So let me just clarify. You said it's lack of yield. Does that mean that volatility has become an asset class in and of itself, and that selling volatility is a way to get that yield?
So selling volatility has always been one way of getting that yield. Not a lot of people like to do it, but it's always been one way, and it's one thing you have to remember when it comes to that market. Another way is obviously the broader credit and fixed income markets. In that space, we see meaningful opportunity coming as a result of this rising inflation.
Is selling volatility maybe good news for the rest of the market? If you're not on that side of the trade, then you're not going to have to suffer when it comes back, right? They provide a cushion.
They do provide a cushion, but again, you see these flash crashes, and you just want to try to avoid these crowded trades that keep creeping up because everyone's diving into whatever they think works.
Okay, Ashish, I want to come back and I want to jump into the terminal to sort of perhaps illustrate what this sell-off might be, because as you point out, there was this major correction last year, but maybe if I'm interpreting what you're saying right, this could be a different type of, there could be a decline, but maybe it'll be in different areas. And we're talking about yield here. This is showing you on the top the S&P 500. You can look right here, and versus the 10-year yield. The bottom is the correlation between bonds and the yield. So when it turns red, they're positively correlated in price. It's just the easiest way to plot it. You can see right now, this has picked up quite a bit in terms of the two being very positively correlated. That didn't really exist in the past decade or so, but it was the norm in the previous 30 years. What's happening here?
So we definitely see that quantitative easing is impacting that relationship between risk and risk-reducing assets called duration. One of the concerns we have right now is that as you see this inflation pick up, as the Fed tightens, even though they're tightening very slowly, that you may see bouts of this positive correlation. And we have to be mindful of that and make sure that you're going into areas where there's good value and staying away from crowded trades. One thing we've been telling investors they have to be really careful about is duration, because investors have poured into passive. They've gone after what they thought was a good performing passive asset class, and in fact they've gotten longer duration. So every investor out there needs to check the duration on their passive portfolio.
Okay, so you got to pick your spots. What about corporate credit? We've seen a lot of companies raising money by selling debt. Are these corporate credit issues attractive at the current price in this kind of environment?
So we think they're okay. It's a difficult environment for yield, and so you do pick up good yield versus treasuries. But, on balance, you're going to keep seeing these deals take place. And so where we like investing is actually in the securitized space as well as in the emerging market space, because those are two spots where people are either being very disciplined around risk or they're actually taking down leverage. And that's what you want to see as a credit investor.
Ashish, thanks for sticking with us through all the earnings reports. That is a great conversation. It's Ashish Shah, Chief Investment Officer of Global Credit and Head of Fixed Income for AllianceBernstein.
All right, let's move to politics now, because Donald Trump opened his new hotel in Washington today, just 13 days until the election. Bloomberg Politics Managing Editor Mark Halperin got to speak with the Republican nominee about his campaign.
I was just trying to say that we built a great building. We took it out of the doldrums, one of the great structures in the country, and we built it under budget and ahead of schedule. And to me, that was very important, Mark, because our country is so... We can't build a highway. We can't build a bridge. We can't fix a tunnel. We're in such trouble. So, I'm very happy with the way it's all worked out. But this building has turned out to be so amazing.
But how does the building connect to your presidential aspirations and your qualifications?
Under budget, ahead of schedule. It's very simple. You look at what's going on. We owe $20 trillion. And that was really... Now, also I wanted to come and stop, and it takes an hour and a half, and we do it. But what it really says is you can do things under budget and great work. This will be one of the great hotels of the world. Under budget, ahead of schedule. Our country has to do things under budget and ahead of schedule.
You'd be surprised to hear that Hillary Clinton's already criticized the hotel.
I wouldn't be surprised.
She said it's a new luxury hotel, but it's the same old story. Relied on undocumented workers to make his project cheaper, products from other countries. He even sued to make his taxes lower.
So just let me say, we had no undocumented workers. A false report was written that they found a couple out of the thousands of people that built it. We had no undocumented workers building this hotel. And in fact, we used E-Verify. For every single worker was E-Verify. And a newspaper came over and looked and said, oh, I think that person's undocumented. This was an E-Verify building. Every single worker was documented and perfected.
Are there foreign products in the building?
That I don't know. I mean, I would like to make it so there weren't. But unfortunately, this country doesn't make things anymore. If you look, our country doesn't make things anymore. Things you buy, whether it's looking a Carrier air conditioner, just moved to Mexico, China, Mexico, Germany. They're making all of our product. This is one of the reasons I'm running, because I know how to turn it around. I mean, the problem we have when you build something like this, so much of the bidding has to go to other countries because we don't make product anymore. Television sets. I would love to buy television sets made in the United States, but they're all made in South Korea and in Japan.
I want to ask you about the polls, but first, one more about the speech. Did it feel differently to you? People are reacting like this is a different tone, a different way of talking about your candidacy. Did it feel different?
Well, it didn't really. I mean, it's different. When I'm speaking in front of 25,000 people like last night, right. We had an amazing crowd. We have amazing crowds all over. I mean, you know that. We have maximum crowds, but last night we had 25,000, and we had 15,000 that couldn't get in. And you know the reason they told me why they couldn't let them in? Stampede.
But people who say this was a great Trump speech, as far as they're concerned,
they're
all
that
great.
They say that. No, I think they're different. But that speech wouldn't be well received if I'm in front of 25,000 people with the spirit to make America great again. But that speech for the opening of a great hotel that employs a lot of people, et cetera, I think that speech was appropriate.
You've redefined how candidates talk about polls. Some polls now you're winning, some you're behind. We've got a new poll where you're up in Florida. Yeah. What's your general sense of where you are in the battleground states? Florida, Iowa, Ohio?
I think we're winning Iowa. I think we're winning Ohio. So do you. I think we're winning Florida. I think we're winning Florida actually by much more than your poll says. You have us 2 points up. I think we're going to do fantastically in Pennsylvania. I think we're winning North Carolina. I think we will soon be winning New Hampshire. We're going up there.
New poll today shows you closer.
Very close. I think as soon, when I go there, people see, look, it's jobs. It's fix our military. It's take care of our vets. It's don't let the world take advantage of us. I mean, I don't know if I'm a great messenger, but the message is absolutely the right message.
You're going to get 270-something electoral votes?
I think we're going to win. Yeah, I think we're going to win.
WikiLeaks, I know you and your campaign have said the press isn't covering enough. What do you want the American people to know about the message out of those? They're not Hillary Clinton's emails, but what does it say about her?
Well, WikiLeaks shows how crooked the whole thing is. I mean, it shows how unbelievably dishonest the whole thing is. And you know what else it shows? I don't know John Podesta, but he says terrible things about Hillary Clinton when he says she has bad instincts. I mean, honestly, I wouldn't want anybody talking about me the way he talks about her. He comes out strongly that she has bad instincts and she doesn't know what she's doing.
Do you think your team's ever written emails to each other about you?
I hope not. I hope not. But, between Bernie Sanders with bad judgment, he says she has bad judgment. But when I look at an email sent by John Podesta that Hillary Clinton, who he works for, has bad instincts, that's a terrible thing to say. By the way, I don't want my president to have bad instincts, that I can tell you.
Were you a little under the weather? No, you're feeling good.
I feel great.
You're closing strong, you think?
Hey, look, I made 8 stops yesterday. I'm doing 5 or 6
I never met
today.
a presidential candidate who didn't get sick.
Well, so far I haven't. Don't talk about it, okay? Don't put it in my head.
Your top communications aide
So far I have not. Well, that's not me. We're going to win. I really believe. And by the way, I wouldn't say it. I really believe it.
If you thought you were going to lose, you'd tell us you thought you were going to lose.
I would say that we will try to win.
Try to win.
There's a big difference. We will try. But we are going to win. And if you look at state by state, hey, look, you're the first one that came out today. Florida, we're up. And believe me, that number is a low number. I really believe it.
And you're not worried about Arizona, Utah, Georgia?
I think Arizona is going to be great. Look, Obamacare is going up over 100% in Arizona. Who in Arizona, and I want strong borders, which they want, because they're having tremendous crime problems and tremendous.
But the polls have gotten closer there.
Sure, it's closer, and I have a third-party person running too, which doesn't exactly help me. I mean, without that, would win in a walk. But Arizona, I've done great in Arizona. I think we're going to have a very big victory in Arizona. We're going to have strong borders, and we are going to terminate Obamacare. You have to terminate. It's a disaster. Arizona, just about higher than anybody else. They're going to be over 100% increase. Hillary Clinton wants to keep it. She wants to make it even more expensive. We're going to win Arizona. And don't forget, we're also going to be doing a massive tax cut. She's going to raise taxes. I'm going to lower taxes.
You were criticized yesterday for not necessarily explaining how health care works well enough. Do you want to revise and extend?
No, I don't want to revise because they were asking me about Obamacare, and I said Obamacare is a disaster. I wasn't referring to Doral.
Right. Where you have private coverage.
No, I have so many people. I have so many different. I have companies with Obamacare. I have contractors with Obamacare. Right. Those people are suffering. But I wasn't referring to the people at Doral. And in fact, I didn't bring them out to talk about Obamacare or health care. I just brought them out to show what a great place that is. But Obamacare, people are suffering with Obamacare. Number one, it doesn't work. Number two, it's so expensive that they can't afford it. And number three, it's closing up businesses.
You're going back to a battleground state right now?
Yeah, I'm going back to North Carolina right now.
That was Donald Trump speaking with Bloomberg Politics managing editor Mark Halperin. You can catch the show, with all due respect, right after What'd You Miss at 5 p.m. Eastern, right here on Bloomberg Television.
All right, we have some breaking news. Stocks, of course, closing the day mixed, but the real action is in the after hours where we just heard from Texas Instruments, the chip maker, beating and raising. So for the third quarter, revenue and EPS beating analyst estimates, the company boosting its quarterly dividend, and also sees fourth quarter revenue in a higher range than what it had previously indicated. Nevertheless, that is still in line with what analysts were anticipating.
So we each have a stock to talk about in the after hours. I'm going to go ahead and say that mine is far and away the most interesting.
I don't know. I've got a stock that's beating on top and bottom line and selling off.
Yeah, but also it's Groupon. I have Tesla, okay? It's an interesting story. The company made its first profit in like 8 quarters. So they actually made a profit of 71 cents instead of a loss of 17 cents or even a loss of 54 cents, depending on which measure you look at. The company beat on sales as well, $2.3 billion in sales. We were looking for $1.8 $8 billion in sales. So Tesla just beating on every single measure, up $10.41 in the after hours, or 5.2%.
So this is pretty interesting. I'm looking at Groupon, admittedly a little less exciting, but hey, who doesn't like discounted items?
Yeah,
you don't forget it. You know, I'm more excited about this.
You are a Snapchat guy, so do you use Groupons a lot?
I don't know. I don't even know how the two are connected. All right, but basically what you're looking at is some solid beats in terms of revenue. 721 million, estimated 709. The projections for the year end also a little bit higher than earlier estimated. Looking at revenue from 3.08 billion to 3.15 billion versus about $500 million less earlier with earlier projections. The shares are now selling off a little bit. They also, of course, as Scarlet told us earlier, they did announce within this earnings report that they're also going to buy Living Social, which, yes, is still around. But
it's former competitor.
Right. As you also point out, they said that the acquisition was immaterial. But they're going to close on that pretty quickly, and shares moving down here. So perhaps the narrow beat that they had was not quite enough to.
Who would have thought, you know, when it first started, Living Social, who would have thought you could take it out for an immaterial price?
Yeah, at its peak, it was $6 billion.
All right, what'd you miss? Shares of Waste Management climbed today. Speaking of beating, the company said revenue for its third quarter increased 5.6%, boosted by higher volumes and yield. The trash collector also raised its annual guidance for adjusted earnings. Joining us now from Houston is Waste Management CEO David Steiner. David, thanks so much for coming on the program. Let me ask you how you beat. You beat on earnings. You beat on sales as well. Was the business doing better than analysts had estimated? Were analysts too low with their estimates?
Well, you know, we're really sort of clicking on all cylinders. You know, when you look at Waste Management, there's really three things to look at. There's price, there's volume, and then there's our recycling business. We had a great quarter on price, 70 basis points higher than last year. We had a great quarter on volume, over 100 basis points higher than last year. And then recycling, which has been a drag for us over the last about 3 years, actually added 3 cents to the quarter. So we sort of have price, volume, and costs all going in our favor. So, you know, we were about 13.5% up from an earnings point of view. Beat Wall Street consensus, beat our internal expectations. We've been doing it all year. We plan to do it again in the fourth quarter.
So on recycling, that's interesting because Bloomberg Business Week, I believe, wrote a story at the beginning of the month about how it's been tough for California, for example, putting so many bottles and cans in landfills instead of getting them to recycling centers or out to, say, China, which would normally buy that kind of stuff because commodity prices have just been too low. How have you seen a turnaround in that business?
Yeah, there's no doubt. When you look at the various commodities that we recycle, there are some that right now are profitable. Those are primarily fiber and metals. So aluminum cans are profitable, and all the paper that you put into your recycling bin, whether it's cardboard, newspaper, you know, those types of things are actually very profitable. Once you start moving into things like organics and glass, they become less profitable because the markets are down. But, you know, in California, they'll do things to subsidize those type of materials to make it to where we can make a profit and people can recycle those. You know, elsewhere in the country, sometimes it doesn't work economically. But what we say is that we'll do whatever our customer wants. We need to make sure that we make a profit, but we can recycle everything you have, 100% of it. It's just a matter of how much do you want to pay so that we can remain profitable and we can get those materials actually recycled.
Yeah, you've said when prices are low, you have to charge the municipalities for continuing with recycling. I want to get an update from you. Are you renegotiating recycling contracts with towns and cities across the U.S.? I mean, what kind of numbers can you give us?
Yeah, we're about 80 to 85% through restructuring the contracts. And the way we're restructuring them is we're saying, look, you tell us what you want us to recycle. And what we'll do is we'll build you a matrix. You tell us the materials you want to recycle. We'll tell you how much it costs us to recycle those. And then we'll add on a small profit for us. And those will be the dollars that we'll either get from selling the product, or we'll get most of it from selling the product, and maybe the municipality has to put up some of the dollars too. Now, when commodity prices come back, it'll get to a point where the municipality can basically recycle for free, where the commodity price can cover our processing costs. But processing some materials is cheaper than others, and the way you process them is sometimes cheaper than others. And so we can put together a matrix for all of our customers, whether they're municipal customers or commercial customers and businesses. We can put together a matrix that says, you tell us what you want to recycle, we'll tell you what the price is going to be, and they can make the best both economic and environmental decision that they can make.
David, your stock has been on quite a tear the past 5 years or so. Your company right now, I'm not sure if you're aware, is one of these companies that falls under an interesting classification in benchmark indexes where you're both classified as growth and value right now, according to Russell indexes. How do you see your company? Is it a value company or is it a company that's poised for growth?
Well, it's interesting because those various definitions that we all look at, I always look at them, and it is interesting because I see us sort of in a lot of different categories. But what we try to do is plain and simple, create shareholder value. What we're all about is taking our free cash flow and growing our free cash flow. So about 5 years ago, we said our baseline's about $1.2 billion of free cash. Just today, we came out and said our new baseline's about $1.5 billion of free cash. So we've grown cash very handsomely over the last few years. We've also started to see revenue grow, which starts to make us look more like a growth company. On the other hand, we had a couple years of high profitability but lower revenue growth. And what I'm saying is we'll take it either way. We're looking for bottom line profitability growth. If that means that we have to lose some revenue because maybe we have to lose some recycling contracts or some other unprofitable contracts, so be it. As long as we're able to generate more cash for our shareholders, I don't care if you call me GARP, growth, or value. We'll just keep doing it.
We'll just take the growth. All right. What we'd love talking to you about is this sense of where the economy is headed, because you're almost a proxy for the economy. You're a gauge for construction, right? Because new homes, renovations, knockdowns result in lots of stuff being carted away. Compare and contrast the level of activity now versus, say, last year at this time.
Yeah, I find it interesting that when you look at the housing sector, which is really the best correlation that we have, we've been in a supply deficit for the last 8 years. And so we are not producing enough homes to meet demand from new home creation, new family creations. And so we should be producing more houses. I find it interesting that one of the reasons we're not producing more houses is because we don't have the skilled labor. It's interesting when you look at our sector, the transportation sector. I'm also on the board at FedEx. We have a shortage of skilled drivers. We also have a shortage of skilled mechanics. And so here we are with hundreds of thousands of jobs that can be filled, and everybody talks about closing the income gap by raising the minimum wage. I say close the income gap by raising the minimum level of training. If we can train people to be mechanics, if we can train people to be drivers, if we can train people to be skilled tradesmen for the production of homes, the jobs are out there. So let's not talk about closing that wage gap by looking at a minimum wage job. How about we train people to get a high-value job, a job like a driver for waste management, where you can make $100,000 on the West Coast? How about a job as one of our mechanics, where you can make $60,000 to $80,000? How about a job as a skilled craftsman in the home building industry, where you can make really good money, a lot more than minimum wage? So I would say let's look at minimum training rather than looking at the minimum wage.
David, just real quickly here, you talked about your free cash flow. It is up from last quarter. Your dividend is about in line with the Dow Jones, with just industrial companies. Are you going to raise that? Are you going to put cash to work there?
Yeah, annually we look at our dividend, and we've raised it sort of between 4% and 10% over the last, since I've been CEO now for about 12 years. As we generate more free cash, when we go from $1.4 billion as a baseline to $1.5 billion as a baseline, we have $100 million of extra cash. We're going to return that to our shareholders. Some of it's going to come through the dividend, some will come through share repurchases. But I would fully expect that we'll continue to grow the dividend commensurate with cash flow growth.
All right, David, thanks so much for joining us. David Steiner there of Waste Management, coming to us from Houston, Texas.
All right, coming up, a depreciating yuan is sending another currency higher, Bitcoin. So what's fueling this correlation with the cryptocurrency? We'll have that answer next, as well as some other deep dives.
Scarlet, what'd you miss? The Chinese yuan's been making new lows. The offshore yuan, that's the one traded outside of China, is at a record low. And that weakness in the yuan is resulting in a boon for another currency. Come inside the Bloomberg here for my deep dive. What you're seeing is when they go low, we go high. I like, you know.
Yeah, I like that. I like that.
What happens is when the yuan goes down in value, and I've inverted it here, that's the blue line, you see money move into Bitcoin. Bitcoin is very popular in China. China accounts for 90%, roughly 90% of the trading in the Bitcoin and cryptocurrency in general. Bitcoin allows Chinese people who face controls on capital outflows to invest in another currency. It's another way to get around capital outflows.
I like that.
It's the answer to so many questions.
I know.
Scarlet, Bitcoin is the answer to so many questions.
But does it not raise even more questions with it?
I don't think so, no.
All right, I can explain to you Snapchat. You can explain to me Bitcoin.
But you get Bitcoin, right?
To some extent. Let's move on.
Okay.
I'm looking at.
I think the answer is no.
What I like is this interesting chart today that was on Bloomberg from our First Word Commodities team. This is really interesting. This is kind of a forward-looking take, if you will.
I love this chart.
On Brent prices. So we're talking about Brent, not crude. The top line is showing you two different contracts here. The blue one is for June futures. The white one is pretty much right now. This is December, so very closely. There. Right. So basically what you're looking at the bottom is this spread that has come up, where the prices for June are much higher. So you can see that blue line has moved up. The spread between them, the bottom panel there shows that spread. It's moved up. That means if I've got oil in store, I might want to just hold on to it. Then you also take into account, this is what the team was explaining to me, that if you assume the inventories generally are going to be positive, right? So you're adding more oil to inventories. At some point, something's got to give, and when all that supply comes online, then prices will react negatively and move down.
This is the dreaded or celebrated, depending on where you stand, contango trade.
Exactly.
Right?
Precisely. It's upward sloping futures.
It's so valuable later on that you're more likely to hold it on a container ship or somewhere rather than bringing it in and selling it right now. All right, great charts. Up next, highlights from our exclusive interview with the CEO of Monte Paschi as he seeks investors to back his $5 billion euro capital raising plan. This is Bloomberg.
What'd you miss? Shares in Europe's oldest and most troubled bank were sliding today in Milan. It comes as the CEO of Monte Paschi seeks investors to back his €5 billion capital raising plan. Marco Morelli spoke exclusively to Bloomberg Daybreak Europe.
I think the business plan, projections, and everything we presented yesterday was actually the first step towards moving on, put the bank back into a stability trajectory and then look for and seek real interest from outside investors. This is actually something we could have done and could have started only on the basis of the new business plan. So interest is already there. We now need to move to stage 2 and see where we are heading to.
Let's explore that interest a little bit more, if we could. I mean, are investors actively approaching you? Are you having to pick up the phone and call them to get them interested in the world's oldest bank?
Investors so far have been very proactive in approaching either the bank or investment banks working for us. As I said earlier, at that stage, we couldn't engage in formal talks for obvious reasons. So now this is what we're going to do.
Let's dig a little bit deeper. Lots of press reports that you're speaking with the Qataris, you're speaking with Abu Dhabi, with the Kuwaitis or the Chinese. Give us a complexion of, are you approaching sovereign wealth funds? If so, are they in the Gulf, or are you more focused on Asia or America?
I think at this stage, we want to entertain talks with a multitude of different investors. And then we will define which is the best route we want to pursue and see what is the most appropriate potential partner.
And do you have a number in your head for the amount of the capital raising that you want to come from these cornerstone investors? Or are you open to all things?
I think we are open to all things. I mean, this is going to be a mixture of interest from core investors, interest from institutional investors. We need to find out what is eventually the conversion rate of bond conversion we're going to launch in the next few weeks. So difficult to gauge as we speak what is going to be.
What would you hope for? I mean, you've got $5 billion that you want to raise. The amount of the debt that you swap equals the amount that you've left that you've got to raise. What's your best ambition on this? Because the three legs of this stool are tied together, aren't they?
They are. My ambition as the CEO of the bank is to look for long-term stability. I mean, we need to make sure that the bank eventually...
But how much of that $5 billion, Marco, would you like to see convert from debt?
Well, difficult to make predictions, to be very honest. I think there is going to be a... We actually received huge interest from bondholders to entertain talks vis-à-vis of the potential conversion. So at this stage, difficult to, come up with a firm number. But this is, at the end of the day, we want to make sure the bank raises the $5 billion. The $5 billion are actually the base upon which we projected the plan, and this is what we want.
That was Monte dei Paschi CEO Marco Morelli. Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg. What'd you miss? Tesla reported its first profit in 8 quarters. SolarCity moving higher with it, plus Groupon buys Living Social. Don't miss this. Tomorrow you've got UK third quarter GDP coming out at 4:30 a.m. New York time.
And don't miss this. Deutsche Bank reports earnings out of Frankfurt before the U.S. open up trading.
And a big day for earnings. Amazon and Alphabet both reporting after the bell on Thursday.
That's all for What'd You Miss. Thanks for watching.
This is Bloomberg.
I'm John Heilman.
And I'm Mark Halpern. And with all due respect to Donald Trump's 5-word message today, you may be under budget and ahead of schedule, but you're a little over your word count. On the show tonight, a schoolyard fist fight, a Florida forensic, and Hillary Clinton's message finale. But first, with less than 2 weeks before the election, Donald Trump did what every underdog presidential candidate would do in his position: attend a hotel ribbon cutting with his family here in Washington, D.C. There has been some head scratching in the media over this move, with critics accusing Trump of foolishly taking time away from his campaign to promote his business interests. His team says it's a perfect example of his management and his leadership ability. For his part, Trump gave what some are calling one of the best and most focused speeches of his entire campaign, in which he touted his hotel and in his signature line of the speech said the project was finished under budget and ahead of schedule, and promised to bring that kind of ethic to Washington. After the event, in an interview for The Circus, our Showtime documentary series produced in conjunction with Bloomberg Politics, I asked Trump about what was for him a very personal speech today.
I was just trying to say that we built a great building. We took it out of the doldrums, one of the great structures in the country, and we built it under budget and ahead of schedule. And to me, that was very important, Mark.